right. Good afternoon, everyone. Oh, sorry about the tardiness. My name is Linus Yosi. I'm an insurance agent, independent insurance agent, and I work with Goosehead Insurance. So been working with insurance maybe on and off for like 2-3 years. A month ago with Goosehead, and basically we help with providing insurance for your auto, specifically new homes, but your autos, home insurance, flood, umbrella insurance. For those of you who are familiar with the umbrella policy, we pretty much do everything. We also do commercial. I have a commercial connect. I'm not actually licensed in commercial, but anything that you need as far as getting insurance, I can do it for you or have a connect for you to get it. Today, I'm going to just try to give you some information and just some knowledge on insurance, because I've worked with some realtors and some lenders, and it's always been a kind of back and forth, or he say, she say, when it comes to the client and the lender and the realtor. One thing, as far as the realtor, I mean, they pretty much know all the information that you need to know about the home, as far as like how old it is, the area it's in. A good thing to know about a home is, especially in Houston, is if it's in a flood zone. Because though that, in my experience, has made or broken the deal when it comes to closing or staying in making it to the contract level as far as signing a home. Roof age would help with knowing if they're going to get a premium for their insurance. Although insurance doesn't rate your doesn't do a hard inquiry on your credit score, it does mirror it. So if you do have good credit, you're liable to have a good premium. But also it does go off of your area, the home, the square footage, if it's in a flood zone, the loss history of the property, things of that nature, and the material as well. Another thing that for me that would help with at least providing, because anytime if you're my customer, I'm going to give you the best premium and give you the best knowledge. I'm not trying to make a buck off of you or anything like that. I want you to be insured. So one thing is when you have a client, and of course they're going to have a certain amount that they're paying for the home, to purchase the home, and also if they're going to a lender, how much the lender is offering them. Now those amounts do not have anything to do with the dwelling. The dwelling is only and strictly for the walls, floor, ceiling, and roof. It's not for your land, which is included in the purchase price. It's not for it's not the appraisal, because the appraisal includes your land value. So whenever we're like getting those numbers for the dwelling, it's always been somewhat of a battle. My realtor says it's this much, or my lender says it needs to be this much. As far as the dwelling amount. Gotcha. And that does help with reducing or increasing the premium. So like if a home is $330,000, typically $20,000 to $50,000 of that is the land. So to build just the structure, unless they have marble floors or some type of custom design or build in their home, typically their home is going to be worth, just to build to its like state, around, let's say 120, 150, even 190. And it helps with, I break it down for all my clients to let them know exactly what they're paying for, what they're insured for, what they're not insured. And so if you're insuring a home based off of the purchase price, typically you're going to be paying for money that you're not going to get. Mm-hmm. If your house burns down, God forbid for anyone, if your house burns down or lightning strikes it down, whatever, and you have to build it to its like state, they're going to appraise that. They're going to, adjuster's going to come out. They're going to say, oh, this is the material you have for the floor. This is the material you have for the exterior build. these are the square footage. Okay, yeah, you paid $330,000, but it only costs $190 to rebuild this home.
So they're only gonna insure you for the reconstruction cost.
Exactly. Right. They're not gonna give you any more than what that home is worth.
So how they determine? So my house that's valued at $330,000. How does the adjuster determine? Oh, it only costs $190,000 to build this $330,000 house. What do they say?
Material. So the material, because especially now, I want to say since COVID, a lot of the material and things that you use to build a home have increased in price. So they go off of that, especially when we quote, it has a replacement cost estimator. So it goes in and it adjusts for, okay, you have wood floors. Wood is typically this much per yard or anything like that. And then that's how they adjust it. And so they're gonna go off of that regardless of anything. So even if you have your home insured up to $330,000 for the dwelling, you're only gonna get what it's worth. You're only going to get what it's worth. So you would typically be probably paying for $100,000, maybe $150,000 more than what you'll actually be awarded. Yeah.
So what should we do? So in that situation, what should we do? Should I only get a policy for like $190,000? You can move that.
In that situation, as far as like, because when I've spoken to a lot of realtors and clients, I ask them like, when you go to the home, does this are there any special upgrades or anything like that? That helps me to know, and a lot of even some clients, they'll help them to know, okay, well, to rebuild this, it's not going to be $330,000 because I got this because it's cost this much because it's in Heights. Right. Or it's in Katy.
It's the land.
But yeah, it's the land, it's the environment, it's the convenience. And so just with that, and sometimes even on the appraisal, if you go to the county appraisal district, they actually have how much the land is valued, even over the years, if it's increased or decreased, and you can kind of gauge it off of that. But sometimes people are really good, especially realtors, they're pretty good to see, okay, yeah, this is a good house, this is a nice home, nice area, but this is probably not worth $300,000, or it's probably not worth $400,000 to replace just the walls. Because even if your house burns down, you can't replace your land. Right. So why would you be paying on your land? Exactly.
What So who would be responsible for recognizing if a client is paying too much for insurance, or it's getting overinsured?
Typically, it would be the realtor, because they're the one that's with them, going to the home day to day.
Because as a realtor, if my buyer's trying to buy the house, we gonna say, hey, they paying $200,000, you need to get $200,000 worth of insurance. That's the automatic connection that we gonna make.
And I've always had to struggle with that, because in my mind I'm like, this is a great policy. You don't have to spend $3,000 a year on this policy if you just tweak or get it to where it needs to be, as far as you're not paying too much, but because of course you always do a little cushion, because even that replacement cost, the dwelling, it includes labor. So that includes labor as well. So that's what the replacement cost estimator is gauging as well. Now, some carriers that we work with, they don't have that replacement cost. So it is beneficial to have that communication with the realtor and with the client, because I can't say, oh, I'm looking at the home on HAR or Zillow and then say, okay, yeah, that is $300,000. Oh no, that's less than $300,000. I'm good, but I'm not that good, and I don't want to, because I can be seeing something on Zillow or HAR that hasn't been updated. So they probably got new wood floors, or they probably got that crown molding or things like that. Yeah. And so speaking with the realtor that's actually been there, showed the house, went all through, knows if it has issues or things like that. All those play a factor in getting a great policy and a decent and accurate policy for the client, to where they are getting an accurate quote and not paying too much or being under insured.
So one of our members asked about credit. So you mentioned about credit as a soft pull. Her question is, what is considered a good credit score?
So one thing that a lot of people don't know is that you also have, alongside with your credit score, you have an insurance score.
And you got an insurance score now.
Yeah.
Everybody got the individual scores now.
And the crazy thing is they rate it off your, of course, like you don't have any, with autos, you don't have any claims, a lot of claims, you don't have accidents, things like that, of course, and you're consistent. You've consistently had auto insurance. With home insurance, they rate it off of course, loss, claims, things like that, and if your liability limits. One thing that I want everybody to know, people out there, everybody in here, the higher your liability limits are, the better your rates will come. You'll end up paying less for more.
Really?
People that do state limits for the auto insurance companies see you as a higher risk. It's like, I just got insurance to be in compliance, not that I care.
Yeah.
So can you explain that a little bit more when you say liability limits? What do you mean by that?
Liability limits. So basically, anything that you're liable for, if you cause harm or anybody injures themselves on your property, dealing with your property, whether it's renters or it's homeowners insurance, and with auto, if you cause an accident, hit somebody, hit a building, hit anything like that, those limits, the higher they are, the better you're rated, and the better your rates will be moving forward. And a lot of people, because of course me, before I got into the insurance game, give me the minimum. I'm a good driver. It's just give me the minimum. Matter of fact, I don't even need anything else. Just give me the liability. They say I need my comp and collision for comprehensive, just all I need. But honestly, that is the worst thing you can do for your insurance history, because it's crazy, because I've had, matter of fact, it was twin sisters. Everything the same. Of course, their occupations were different, but pretty much the same. One was getting really good rates for the same vehicle, for the same vehicle, but different areas. But she was getting really good rates coming back because her insurance history was almost impeccable. She had 300,000 limits for her liability in her when she was renting a home, when she was renting an apartment. Her auto insurance, she had at least higher than state limits, which is 30, 60, 25. So that's $30,000 per, and if you get into an accident, that's $30,000 per person that you injure that needs medical attention, up to $60,000. So if you cause any like $70,000 worth of injury, that's out of your pocket. $40,000 that's coming out your pocket.
So
and $10,000 coming out your pocket.
All right.
And so and then with your home, 300 and above. 300 and above helps to improve it.
So what does that mean? Like speak to us, because some of our agents, they've never dealt with homeowners insurance or any of that stuff. When you say 300 and above for a homeowners insurance policy,
liability, just the liability.
And liability is if somebody gets hurt inside the property.
Yeah, inside or on your property. This could be a relative, this could be a friend, this could be somebody working on your home, this could be somebody walking by. This can honestly be somebody breaking into your home.
Really?
Yes. It's crazy. I'm not a lawyer, but it can hold up if someone basically they're just on your property and you can't prove that they're trying to break in or anything like that, but they are. They can sue you for
They get hurt.
Yeah, they get hurt, your negligence,
And don't
anything
care.
like that. Yeah. Exactly. And so I mean, I'm not gonna get into that. I'm not a
You're
lawyer,
not a lawyer.
but I know that those situations has happened. But yeah, so liability limits is just basically, again, showing the insurance companies and the people who, I guess, rate it.
So regardless of what the value of the home or the replacement cost is for the home, you're saying my liability insurance for my home's insurance should be $300,000 or above.
300 or above, yes.
And that makes me look good to the insurance company.
Exactly, because it covers you. And they also have like an extra liability coverage that's called the umbrella. The umbrella policy starts at $1 million worth of coverage. Excuse me. And so that's like if you were to cause any severe incidences, or if anybody's just trying to get up on you. If they're trying to get up on you and they see that, okay, you live well or whatever, and they hurt themselves on your property, or you know, everybody's trying to get a butt, you hit them hard, you know, something like that, then they're trying to sue you, they're trying to do something like that. That umbrella covers all of that to prevent you from having to dip into your own personal fund. Because typically when someone's trying to sue you, they're not going less than $1 million. Even if they just lost it, we're not gonna say like just lost the finger. I'd be mad if I just lost the finger. But things like that, and it's crazy because I've actually had 2 people in my life, not like just close friends or colleagues, that actually could have benefited from an umbrella. Now, I wasn't in their business. I don't know if they had one, but they really could have benefited.
Is it a major difference in price between having an umbrella or just the regular $300,000 and above liability?
Are you saying the price of an umbrella or just with everything?
So like with my policy, if I included an umbrella, what kind of adjustment in premium would I see?
The umbrella is
Typically.
Typically the umbrella is its own policy. So depending on what carriers, because some carriers, they provide that option and you get like a discount on your home insurance or any other auto insurance company, something like if you include it in, because it can cover simply just your premises or your premises and your auto. And that varies in the premium of the umbrella and the home policy, depending on what carrier that you go with. But it proves to be very beneficial for some people, just to have that comfort. We had a colleague of mine. I say he's a colleague, but he's in the office. I've never actually met him. But he had a client that he has a pool, older man with kids have grown, college, things like that. But neighborhood kids jumped the fence to play in his pool. Now, one of them injured himself. He didn't drown or anything, but he like did a trick or something like that. Hurt himself, injured himself. Ended up going to the hospital. The parents were suing the man. Man wasn't home.
Yeah, jumped his fence.
They jumped his fence. He didn't give them permission to be there, but it's holding in court now. Again, I don't know the logistics or anything in it. I just know that I was just shocked that it actually helped him. I'm not sure if he had an umbrella or not, but that situation would have helped him with legal fees, with court costs, and if he wants to just get it over with, like settling out or at least covering the child's medical medical fees.
Yeah.
So things like that is what helps with. That's how an umbrella can be very beneficial and things like that.
So if I have a client and say they're going to buy, say, a $250,000 house, say that, and we come to you and we say, you know, what kind of policy should they get? Like, how would you structure it?
So with anyone buying a home for the first time or just with your home period, of course, they're automatically going to have the 5 main coverage. Or 6 main coverages. That's the dwelling, your other structures, which is any structure on your home that is not directly, like a shed, your fence, driveway, any structure on your property that's not directly attached to the home, basically.
Okay.
So that's your other structures. Then you have your personal property, which is deemed anything in the home. Like if you were able to take your home, flip it upside down, shake it, anything that falls out is considered your personal property. So that's of course because even me before insurance, I thought personal property is anything I can, like my clothes, my watch, that's my personal property. But owning a home, even an apartment, your furniture, your rugs, your appliances that you purchase, things like that, especially in a home, your fridge, anything like that, that is considered your personal property. So you want to insure and cover up to, accurate. And
I add to that too, what a lot of people don't know, even the items inside of your car is protected under your homeowner's insurance.
True.
Right? Like a lot of people think that when you're paying car insurance, so the automobile itself isn't protected, but your items in the inside, if you ship those things out, like you said about the house, it's still protected under the house policy.
And sometimes they have it on the policy stated as off-premises property, things like that. if it's, somewhere else, whatever, but it can still be covered, depending on the carrier, depending on like how you,
What'd you say,
get
Jim?
mad.
I experienced that. My car had got broken into and I was able to use the homeowner.
Yeah.
Wow.
Yeah. Another thing, and then you have your personal property, then you have your loss of use. This is the amount of money in case anything happens to your home. Now, you would have to file a claim, and during the repairs of the home, if it's deemed that your home is unlivable, then this is the amount of money that they give you to basically live as if you were still in your home. Rent an apartment, rent a house, food, gas, water repair. As far as it's deemed unlivable, you got construction going on and things like that, trying to patch a hole up from a windstorm or something like that, and it's just not safe for someone to live there. This is the money that they give you to continue living as if, so groceries, things like that, and to continue paying your mortgage. Although you got your house, they're still going with that money. So that's loss of use. And then you got your liability, personal liability, which is what's recommended 300,000 or above.
Yeah.
And then your medical payments. Now, medical payments is like for that little one-off type stuff. If a friend, all the same things for liability. If someone comes on your property and injures themselves, then it's we in my office we like to call it "don't sue me" money. As it's like, someone comes to my house, they're playing around, or they're just hanging out, scratch themselves, get like a big gash from their arm. It's like, let me take you to the hospital. Oh, let me help with them paying. Don't sue me. And then if they do come back and sue you, that's how you got the liability to help, the liability limits to help with that. Those are the coverages that typically automatically come. They're automatically covered on a home policy.
All right.
And
So those don't already be in there.
Those are already there, unless you opt out or whatever. Some carriers won't even allow that. Like you got to put some type of a limit there. And then you have your water coverages. A lot of people sleep on it if they're doing it themselves, or if they're just like, oh, I need to save money. But this is typically the 4 main water coverages are your sudden and accidental, which automatically come on, which typically is automatically on the policy. It's not stated a lot of times. Sudden and accidental is just like you have a home, they understand sudden accidental things happen. So you're automatically gonna be covered if something happens. You can't control that. And then you have your water backup. Water backup, if like anything with your pipelines attached to the sewer lines, water lines, backs up, they do construction in Houston like every other second. And if they hit like the wrong line or something on the other side of town, it could affect you. Start backing up sewer water into your home, fill up your tub, shower, sink, washer and dryer, anything like that, cause damage to your appliances or to your personal items. That's what water backup is going to help with that, as far as any of the damages caused by water backup. So if your floors are messed up, if you have a 2-story and it happened on your second floor, your ceiling's messed up, walls, things like that, carpet.
That's usually not automatically added to the policy. That's something that somebody would probably have to recommend.
Yes. There are certain carriers that automatically have it just on there, but typically it's something that you endorse. And it is a significant, I won't say it's significant. It can increase your policy like maybe $10 to $15, but it's nothing like crazy. And it's like you just paid all this money for this home, another extra $15 on this policy.
Ain't gonna break
it should. It should, And so you want to keep that, you want to keep your investment. And so that water backup, then your foundation. This one, when I first learned about it, I was just like, it's kind of trifling. But foundation coverage is basically if any of your lines that mess up, water lines, pipelines, things like that, where a contractor has to come and fix it, they're going to dig into your foundation to fix it wherever they feel the problem is, or they locate the problem, whether it's in your front yard, backyard, side of your house, or middle of your kitchen, middle of your living room. And let's say it's here, they're digging in this nicely wooded floor, and they're gonna fix the problem, then they're done. They're not required to fill that hole back up. Even if they do, just out of the courtesy of their heart, they're just gonna scoop things together and they're done. They're not replacing this wood. They're not replacing that marble. But that foundation coverage is what would would replace, have that replaced too. It's like state, depending on the limits. Typically it's like 5,000, but sometimes if you know, like, okay, I got wooded floors, and this costs a grip. I got marble floors that ain't cheap.
Yeah.
Let me bump that up to 10,000, 25, 50,000.
So that's another endorsement that you.
That's
have
another
to the
endorsement,
policy, right?
yes,
Yeah,
yes.
good,
There's
man.
again, I think there's only one carrier that I typically write with that automatically has that on there. Like it's not even on there to endorse or take off. It's just automatically stated. And the last one is seepage and leakage. Seepage and leakage, which can be like a hidden seepage. They have different terminology, but all means any hidden or slow leak that goes unnoticed up to 14 days. So you have a water heater, starts leaking. Of course, we're not checking the connections every day. We're not, it's either back somewhere or up somewhere, and it starts leaking. The only way you're gonna notice that it's messed up when you see that brown stain on the ceiling, or
like some leak.
or your floor. You that one spot just wet. You don't know why. It's because like it's rotten underneath the floor or something. That's what's hidden seepage and leak. When you notice things are going wrong up to 14 days, you can call, and typically it's up to the dwelling limit that they'll cover that.
Yeah.
Some are like they give a state amount, like it's random amounts. Like I've seen 54,000, 67,000. I need to figure out where to get that from, but it's like random, but it's enough to at least cover some damage.
So they say up to 14 days, and I got another question for you.
Okay.
Up to 14 days, like how do they know if it, so after 14 days, the insurance company won't cover it?
After 14 days, your insurance will cover it. It's just will be on it depends on what type of coverage you have on your insurance. But typically up to 14 days, it'll still be covered. If it's past 14 days, but they're able to tell by.
Yeah, how do they tell?
Yeah, and I had those questions too. But they're able to, especially the material, to know, okay, this would have taken. It's like a body. Like, okay, typically when it decays, this the stages it goes.
Yeah.
This stage happens at 12 days. This stage happens at 27 days or at 20 something days. So they're able to at least take apart wherever it's damaged and just say like, okay, yeah, this happened like 5 days ago or things like that. Yeah. But it's typically like if you go out of town, like me, go out of the country, I guess. But go out of the country for a while, come back, and things just not, sitting right or going right. And it's like, okay, we can call out insurance.
Wow.
Things like that, yeah.
So all right, so she had a question about the winter storm, where a lot of people's insurance was denying their, they were denying
the claims
because of the pipes busting and stuff like that. She wanted to know what kind of policy would have covered that.
Well, typically it should be sudden and accidental, because a lot of them, they burst accidentally, and depending on like your carrier and like the way that you set up your policy, it should have been covered under sudden and accidental. The only thing that would kind of counteract is if there was something that it could have been prevented. If they feel like it could have been prevented, if it felt like you didn't do anything to help the situation or to prevent the situation or to make the situation a little bit less than what it is, then that's where you can like go back and forth with the insurance, where insurance has a leg to stand on. Because typically, sudden accidental, hey, but if it was something that you could have prevented.
So like not doing preventative maintenance. Well, I guess with pipes though, that's hard to say.
Yeah, with pipes, it is hard to say, but like I know for me, I got a notice from my carrier. Make sure you keep the water running. Make sure you, cover up your pipes, things like that. Now, nowadays, if you have like a newer build, like I'll say about 2010 and newer, they don't really use the regular pipes that are like that would freeze easily. You either got the plastic or the fiberglass, things like that. That it'll take some time before your pipes freeze and burst, things like that. So. It all depends, but one thing, if you, especially working with an agent and like that actually knows the ins and outs and everything like that, I would be the one to basically kind of fight for you as far as like, no, this is covered. and according to your policy, the home is within age, or the home has been, it'll be certain things that you can say, you can do to make sure that it's not a burden on you, and it's taken care of.
You know, with the insurance company.
Exactly, because I go bit by bit to let you know, because I let you know what you're covered for, what you're not covered for, and what's never covered on the home policy. Let me run that list.
Yeah,
What's never covered on the home policy is wear and tear, mold, rust and mold, war acts. So
somebody bomb my house.
if it's like speaking of war, like when they talk of war, it's like if you're in a back and forth with somebody, it's retaliation, or if something is going on as far as like a big like shootout or a big like event going on, that's not going to be covered.
Really?
Yeah.
Like if my neighbors get into a shootout with one another, and
if you're involved, specifically if you're involved too, but governmental acts. So if your house is raided, break down the door, bust down the windows to raid your home, that's not covered.
What if it's the wrong house?
It's not covered.
I wonder who paid for that. When you see it on TV, it's like, who paid for that?
Exactly. Yeah. When I told my wife, she was like, "So who's gonna pay for it?" Like all this stuff we see on the TV.
Yeah.
Earthquake, that's something you endorse always. And then I had enough thought about that. Flood, of course, is never on home policy, it's its own entity. I write flood as well. Huh?
Windstorms separate.
Windstorm.
Like, don't you have to have like a windstorm policy in certain areas?
Yeah, certain areas, yeah. But windstorm is covered on the home policy. It's just those carriers are choosing not to because it'll be a big loss for them. It'll be a bigger risk than they're willing to take.
So then you gotta go.
So you gotta get a separate windstorm policy. Yeah, and we do that as well. The other one is intentional, of course. You burn down your house.
I need that cash though, like, come on, man, I need to get that cash.
Oh, well, not covering that.
Yeah,
But
we know you let that match.
yeah, exactly. One thing I do want to clear up on, because even I had rust and mold and wear and tear. A lot of people are just like, that doesn't make sense. Like, why wouldn't they cover that? Some do. Now, that could be the difference from your policy being $2,100 a year to $2,600 a year adding that policy, because rust and mold is basically maintenance. If you're not taking care of your home or taking care of your property, then it's not up to the insurance company to do that. They just help you if something happens to it. But if you're not like doing the typical things that you need to do as far as keeping your home up, then that's on you. So that's not going to be covered. And because at first I'm like, that's kind of crazy. Like, why wouldn't they cover mold? We can't help. But if you're doing what you need to do as far as keeping your home clean, not like water being around, and not just your homeowner, you really got to step up. Exactly. So they're not going to cover that.
I got it. All right, man, I love it. Y'all have any other questions for Linus before we wrap this thing up? We'll probably shut it down here real soon, man. If they have any more questions, we'll see if they have questions. And you guys have any questions? Or if there's just some last minute things you feel like we should know.
Questions? They have any questions up there? Can you say if they have any questions?
Yeah, they would.
Yes,
They would either type them in the chat or they could unmute themselves. Let us know if there's anything more in depth that y'all would want Linus to talk about. We could do that as well. But you've been pretty thorough.
I try.
With me, man.
I do it with all my clients.
And how long you been in insurance?
Been insurance on and off maybe 3.5 years.
Okay.
But with Goosehead for a year.
All right. Who were you with before Goosehead?
I was with State Farm, and it was like a mom and pop, one of those like, oh, you work with us, get your license, things like that. It was okay, but it wasn't as fruitful as I thought.
It be like that sometimes.
Yeah, especially out of college.
All right, man. Well, no, we definitely appreciate you. I know it was kind of last minute. You made that real quick pivot for us and got us in here, so I wouldn't have been sitting in here doing the insurance training. So now we definitely appreciate it. Appreciate the food and all of that, man. So
Of course.
All right, so that's all. If you guys don't have any other questions for Linus, we'll shut it down on the Zoom. And we'll keep enjoying this food that he brought us. Next time y'all may consider coming into the office.
Yes,
for the
sir.
lunch.
Okay.
All right, y'all have a good one.
We'll take it out.
Hey, yeah.
No problem, no problem.
Then, what's that limit?